Markets are having a rough day today after the Fed Chair Powell came out yesterday and made some remarks and kind of indicated that the Fed has their heels dug in and they are not backing off anytime soon. So let's take a look at what's going on. And this is the Dow right now. It's about 11:35 a.m. Eastern Standard Time. The Dow is down 2.5%, S&P down 2.6%, NASDAQ down 3%, working on giving up all of the gains over the last several days, kind of unwinding that move. We will take a look at the charts here in a minute, but basically there's two things that are affecting markets right now. And again, markets are all about headline risk right now. Any little headline can move markets up or down. And yesterday, last week, some of the Fed board members were speaking, everybody signaling, indicating, messaging that inflation needs to get under control, that is their main focus, their main job. Chairman Powell was reconfirmed for another term. And I bet you, I can almost guarantee that he and Biden and the administration spoke and they said, you better get a grip on inflation or we are not going to renew your term. And that they wanted his messaging to change and to be stronger on inflation. And in order to get inflation down, they have to destroy demand, which in turn affects the wealth that's stored in the markets with 401ks, portfolios going down. That's a lot of wealth destruction there. Of course, that was artificially inflated over the last couple of years. We'll take a look at the charts in a minute. And then, of course, the housing market is way overheating, pricing people out of the market. The affordable housing sector is taking a beating. That's front and center. Biden has put forth some legislative ideas on how he thinks he can resolve the affordable housing problem. And at the end of the day, those artificially low rates is what pumped the housing market up so much because of the affordability. And that's a whole nother conversation. But, that wealth that was created over the last couple of years has to get brought back into control and destroyed in order to control inflation. Because when you add housing, inflation, costs of rents, and things like that, and just cost of housing in general, that puts inflation way over what they're calling it right now, 8.1, 8.3, whatever they say it is, inflation at the consumer level. When you add everything into the mix, well over 20%. We all know that. So they're not fooling anybody. And some of the market money managers, fund managers like Cathie Wood have been pleading with the Fed to reverse course, telling them that they're going to tank the markets. The Fed has said, we do not care about the markets. We're going to tackle inflation because that's what they are mandated to do. That's what they are ordered to do, as well as stable employment. And right now, the employment market is way out of balance with too many jobs, not enough people willing to take them. So they have to get that back into balance as well. So the Fed's got a big task on their hands. And of course, the idea of a soft landing is hotly debated right now, whether the Fed can actually land this thing softly, meaning bring inflation back under control, get the job market balanced again without crashing the economy, crashing the markets, and crashing housing. And Chairman Powell seems to think that he can do that. 1 week, next week, he says it might be a little tricky. And of course, he's using the famous ish in terms of how that landing is going to look. So we all know that there is no such thing at this point, with as behind as they are and as oblivious as they are to what's really going on, whether or not they're going to be able to land this thing softly, meaning unwind all of the interest rate policy and quantitative easing, the liquidity that they pumped into the markets, $2 trillion over the last couple of years. So big task on their hands right now. So let's take a look at the charts, and we'll go ahead and look at the Dow Jones as it's continuing to unwind this move that it's made over the last few days, working its way back down. And of course, this is what bear markets look like, right? They bounce. But once you put in this lower low, coming off this, I guess it was a 1 year low that it broke, putting in a new low anyways in a year. You get a little bounce and then it's going to continue to work its way back down. Of course, that was a technical level, breaking below these lows. A lot of stuff going on. So the Dow is going to continue to work its way back down. And again, it's still basically correction territory right now, down about 13%. You could call it bear market territory, whatever. But again, what we are looking at and what I'm looking at is what the Fed is indicating. They're not going to become interested until you start working your way back to pre-pandemic levels, because this run up here was all Fed driven. This was all the $2 trillion that was pumped into the economy. That's why the market bounced so quickly, because the Fed jumped in and stopped the bleeding. And if you go back to the last time that happened, back here, so this is the pandemic where the Fed jumped in right at the bottom, pumped the markets up. The last time we saw something like that was 2008 and 9. Market was in a tailspin, dropping until the Fed came in, jumped in and propped the markets up, and they let the markets decline. This is the Dow Jones. Back then, they let it drop 53% before they acted. And on the March pandemic, I think it was about 40%. Yeah, 38, 39%, depending on how you measure it, before they jumped in. So to expect the Fed to reverse course on a 15% decline is just not realistic. And there are and had been some people calling for new all-time highs. I think they're understanding now that's just not realistic without the Fed. There is no way you're going to bounce, put in a new all-time high. It doesn't matter how oversold you are. The markets can be way oversold and continue to drop. That's what happened here. Markets were oversold, March pandemic, continue to drop. 2009, this looks a lot like where we were or where we are right now in terms of how markets top. Markets were way oversold, continued to drop. And then if you look at other areas like 2015 time frame, markets were well oversold, continued to drop, bounced a little bit, dropped again. This was Fed, pulling the foot off the gas, putting the foot back on the gas, leads to that big run up until things just finally have to give right here before the March pandemic when things started happening. So we can't really expect the Fed to jump in and bail markets out until they really start to decline. Now, the NASDAQ's taking the biggest hit, obviously, right now. NASDAQ's down at this point in the game right about 27%. So the NASDAQ's getting close to big declines, but of course it had the biggest run up as well. And it's got a ways to go yet. It's got another 20% from here to get back to those pre-pandemic highs before the Fed jumped in and just pumped that market up. Really interesting to look at. The S&P is working its way down, more in line with the Dow, but still down right now, 17%. So still has another probably 15% to go, 10%. Yeah, 15% from here to get back to pre-pandemic levels. So I don't think the Fed's going to pay attention and be concerned at all about the markets until you get back to the pre-pandemic highs before they jumped in and pumped these markets up. And that's where all of these reversals came from. So here is Bitcoin right here on the daily and starting to kind of consolidate after this drop here. So the big debate right now, let's go take a look at Coin Telegraph here. Analysts note parallels with March 2020 bottom. Will this time be different? Analysts across crypto and traditional stocks have taken notice of the similarities between what happened in March 2020 and the moves and the market moves so far this month. If you look at Anthony Pompliano, Bitcoin is up 340% since March 1 of 2020. As central banks around the world devalued their currencies at a historical rate, there is only one asset that stood out from the pack. Bitcoin is the savings technology that shields billions of people from undisciplined monetary policy. Raoul Pal, he is saying that we're putting in a little flag now that could lead to another rally like we saw back at the bottom of March 2020. And then here's an interesting statistic. We were just talking about the liquidity pumped into the market, that the value that's been lost in the NASDAQ during the dot-com bubble, 4.26 trillion. During the 2009 global financial crisis, 2.3 trillion. COVID-19 sell-off, 4.4 trillion. Current decline, 7.6 trillion. But you got to remember, there was $2 trillion pumped into the economy to get it up to 7.6. So if you take it back and take that off, you really only have about a 5.6 trillion decline actually. So kind of in line with the COVID sell-off and things like that. And then, of course, the fear and greed index are at levels not seen since the bottom of 2020. And, lots of interesting speculation out there that the S&P just made a 2% gain in 2 of the past 3 days, coming off a 52-week low. Last time that happened was March of 2009, March of 2020. And of course, the lows, as we know, in 2009 and 2020, we just looked at. So let's look at Bitcoin on those areas. So if you look at this bottom right here in this consolidation that's going on, Is this a wedge that's going to lead to a breakout, or is this just another channel that's going to lead to a breakdown? If you look at Bitcoin on the daily and how this has happened, it kind of worked its way down on this one, bounce, drop, bounced up, kind of had a declining channel with a bounce and a drop, a little consolidation drop. This area right here looks, somewhat similar to what we're doing, and then worked its way back down, rising channel, bounce, drop. So it's kind of consolidating and working its way down versus what we saw last summer, where Bitcoin kind of, bounced its way and consolidated down to a bottom and then rebounded after checking that cycle low a couple of times so far. We've only hit that. Bitcoin's only hit that once here. Of course, I've always said that this $29,000, $30,000 level is going to be really hard to break. We are in the process of breaking it right now. So once price checks that 25,000 level again, then we'll see if that's where you get a reversal bounce, or if it, breaks through and continues to decline from there. So that's going to be your test right there. That's your low so far, 25.2, it looks like, depending on the exchange you're looking at, 25.5, somewhere in that range, 25.2 to 25.5. If price gets down there and breaks that level, then you have more downside. It could bounce from there and check it a couple of times before it ultimately reverses back up into this range. But you could easily get a reversal back up into that $38,000 range. Not a lot of catalysts to drive it there, especially without a lot of the buying that was going on that propped this price up with Do Kwon and Luna and all that. That's a lot of what propped this price up. You had a lot of support at these levels. They were just buying at these, in that $46,000, $47,000 range. Of course, Michael Saylor was buying up in this range. Haven't heard of him buying down here. He likes to buy the tops. So be interesting to see if he comes out with any large buys right here. Of course, he's down below his basis right now, his average basis, but of course that day-to-day fluctuates. He's right about, I think 30,000 is around his break-even number, maybe 30,700, something like that. So it'd be interesting to see if he comes out and buys in this area, or if he has the ability to, based on what's going on. So let's take a look at this March 2020 bottom. And this was a area here that Raoul Pal's talking about, that he sees a lot of similarities, but this was a big steep drop. Nobody knew what was going on. The Fed jumps in, says, the vault is open. We have an unlimited amount of ammo to load the cannon and fire. And that's what they did. So it took that kind of intervention to reverse an immediate V bottom like that. We've never seen a recovery like that anywhere since the 2009 situation. So Bitcoin came out of 2009. So the last thing that we have to look at would be the Dow, which he was referencing from the 2009 timeframe, which was a big V bottom recovery. Here it is right here, but very different. It was straight down. Everybody thought the world was coming to an end financially, and the Fed jumped in and said, we are going to start a asset purchase program, pump liquidity in the markets, do all kinds of stuff. They were buying mortgages. They were buying, assets directly off the books of the banks. They were propping up the banks, doing all kinds of things, loaning GM money. It's a really interesting time back here. And, again, we've covered this before in terms of the amount of time it took. So, a lot of people have that, 5 or 10 year horizon or whatever. Like I said, there's times to be bullish, there's times to be bearish, and there's times to be neutral. And, if you have a 5-year horizon in the thought process, like Kathy Wood says, or a lot of people in the space say, you have to have a 5-year, 10-year horizon. If you bought at the top of 2007, it took basically 1,900 days. So 3 years for the market to recover from 2007 to 2013 to get back to the level. So the 10-year horizon didn't work there. But then obviously from that point, it did continue to go up, and it went way up from there. And we've had these dips and, things like that. And so it's been pretty much nonstop uphill ever since 2008 and 9, because we've had nothing but low interest rate environment, quantitative easing. Markets have been artificially propped up with all the liquidity from the Fed. So we're just in that cycle where markets are correcting, drawing down the liquidity. The Fed has to fight inflation. Very interesting, unique time in the markets right now from what the Fed has to deal with. We've never seen anything like this. So the question is, can they even reverse course? Because that would do so much damage and create so much more inflation. And inflation is already starting to do its thing. So inflation is becoming a problem. It's dipping into people's pockets and affecting their ability to spend, which drives growth and drives the economy. So very interesting times indeed when you take a look at that. So here's something else to take a look at. When you look at this peak here in terms of where we stand right now in this downtrend, Bitcoin has been in the downtrend for about, let's take a look at this. It looks like about 190 days. So the nearest thing that Bitcoin has to go off of is the 2018 bull market, 2017, 2018 bull market decline. So let's go 190 days from the peak here and see where that puts you in this cycle. So right now, the 190 days puts Bitcoin about in this area here, which looks very similar to kind of what we're dealing with right here. The good news is, off of this consolidation, there was a 45% bounce and then down, bounce down, and then ultimately dropped off. It's hard to imagine that Bitcoin is at a bottom area right now, but it took several years for Bitcoin to recover before the pandemic situation. A lot of bouncing around, a lot of big pops and drops, things like that. So that's just how the markets work, especially crypto with being as volatile as it is. So you could potentially see that. And that's what I was talking about, getting back up to this level. So it is realistic to expect, if we checked down below again in that 25,000 level, that you could get a 45% bounce, putting you back up into that $38,000, $37,000, $38,000 range, where price could bounce around again a little bit here, then drop down to maybe make a newer low, bounce back up again, and then ultimately figure out where a bottom is going to be for consolidation until things change, everybody gets shaken out, the space cleans itself up, and more particularly the Fed reverses course, comes back in and starts pumping the markets up. Because you have to remember, Bitcoin has existed in an up-only market from its beginning, and it was created in response to the 2008, 2009 financial crisis, but it's also benefited from everything that came out of that in terms of liquidity, low interest rate environment, things like that. And you can see the network effect where, people pump it up, promote it, get everybody involved, pump it up, and then, reach a peak, people start selling, everybody gets out, goes away, takes time to get new people in, pumps it up, sells, drops, go away. It just kind of repeats that cycle as it goes along, but it's only existed in a macro bull market environment with, liquidity being pumped in by the Fed, low interest rates, things like that. Bitcoin has never existed in a down market, in a global macro economic down cycle, without the participation of the Fed and central banks around the world. So that's kind of what Bitcoin's trying to figure out right now, is what is it going to look like in that environment? What level is it going to hold? How far will it go? And we already know this was just 2 years ago when we had an extreme situation and Bitcoin dropped down to that low of about $3,800. So again, right now, the two lows that Bitcoin has reached recently has been around $3,000 to $3,800. And, after the 2017, 2018 bull market and that 2020 pandemic level, and then it reached a high of 69,000. So really, that's your range overall that price we know has gone to. So you have to reasonably expect it could go there again if you had a big major situation. And nobody really knows where ultimately Bitcoin is going to end up going. The only thing that we can really look at is what has it done in the past, and that's no guarantee of what it's going to do in the future, but it's a pretty good indicator. And we've looked at this before, and we'll check it out and see where we are. A lot of people say Bitcoin doesn't have to or won't go to that 200-week moving average, but it's marching its way down there. Every week it's getting closer and closer, and price is starting to level off. So it looks like around that $22,000 range, which is not far from this 25,000. So it's kind of reasonable to expect that price is going to get down to that 20 or 200-week moving average, check it and see where it goes from there and reset the cycle. So if it does get down there, what you could reasonably expect is some consolidation like we saw after 2018 during that 2019 period before it started running again. This March 2020, what I believe is this consolidation happened in this area on the 200-week moving average. It bounced, started working its way up. This is when the pandemic started becoming a thing, November, December 2019 into 2020. So that kind of took a little steam out of things. And then boom, there's your Fed driven bull market right there, macro event. So that's what I'm keeping an eye on right now in terms of where price could be headed, what's going on. And, it seems like Bitcoin wants to go check those levels. Now, the altcoin market is kind of in the same situation, running the same type of price action, testing these macro. This is Ethereum here, testing these macro support levels here. Again, last line of defense is around that. Looks like about $1,000, $900 level that Ethereum could work its way to. If you take a look at the averages there on a weekly basis, Ethereum's 200-week moving average as well. Right in that area, about $1,100, $1,200. So Ethereum could have a date with destiny there in terms of trying to reach that 200-week moving average. Here's Avalanche right here, hung up in this area of consolidation. If that doesn't hold, then the next level is about $13 for Avalanche. It's in the 30s right now. Had a wick low to 23. Held. So if it breaks through this area, it could run its way down to that $12, $13 range. Solana, a lot of people talking about Solana, has a lot of support right here in this level of about anywhere from about 30 to $40. Wick low so far 35. If it gets below there, and you're talking back around the $20 range. And if you look at those weekly moving averages again, this one hasn't been around long enough. At least I'm looking at it on Binance to really be able to track that. But in terms of the daily support, you can see where it's at right now on that macro scale. Matic running the same type of thing, Cardano. So all of the altcoins are kind of hanging over the cliff right there. And if you take a look at the total altcoin market, same thing. It's right at that last line of support. If that breaks with Bitcoin, then you're going to go down. The markets are going to go down and start checking some of these major macro levels. And there's the altcoin market heading towards that 200-week moving average, which puts it about 280 to 270, 280 billion dollar market cap, 444 right now. So almost cutting market cap down. Let's see what that would be. That'd be another 35% from here. So is it unreasonable to think that altcoins could drop another 35% from here? What we've seen on some of the coins is they could still drop another 90% from here, from this level. And if that were the case, if you take a look at the altcoin market cap, 60, 70, 80%, it takes you down to a really, really low market cap level. So is that possible? Anything is possible, right? So all we can do is just watch the charts, watch the global macro economic environment to kind of make sure that we're protecting ourselves, make sure that we're in tune with what's going on in the market, because as we have seen, those events do matter. They do weigh on the markets, headlines. All of the events around the world are a factor in the markets, but the biggest factor right now is the Fed and central banks around the world. So keep an eye on the inflation numbers, keep an eye on the messaging coming out of the Fed, because our buy signal is going to be when everybody pivots, interest rates start reducing again, and QE is back in place. And we've got more time before that's going to happen and more potential downside. And you're going to get some nice bounces here and there. So just keep an eye on the headlines, keep an eye on the news and earnings reports, things like that, because markets will react to those. I will see you on the next video.